Hello there. Welcome to my channel. Now we want to look at a question from Sue on June 2023. So our question is a question on partnership. We are given a question there, and the question reads: the following information was available on 3rd June 2018 from the partnership books of Andrew and Chelsea after the preparation of the profit and loss account. And we are given balances that we are given there. If you check there, we have capitals at the beginning, as Andrew has 80,000 and Chelsea has 50,000. And then the information that we have is going down up to the end there. So what the question now is asking us now on the end there, the question here is saying prepare a statement of financial position as at 30 June 2018, showing current accounts within the statements. So what is key there is that let's take note of the instruction that is there, that we should show current accounts within the statement. That is very important. No need to put the balance only. You need to put the current account there and show it in that statement of financial position. And we know this statement of financial position is the one that we say is the another name for statement of financial position is the balance sheet. It's very important to take note of that, right? Let's go there. We know when we are preparing our balance, what we start with the fixed assets or the non-current assets. But if you look in our question, here we are given the figure for non-current assets is 120,000. We are also given the figure for current assets at 55,250. These figures are already pre-calculated, so we just have to take these figures and put them in the statement of financial position. So no need to worry about that. Then we're also given a figure for current liabilities, having been pre-calculated again, which is very important to take notes. No need to list them one by one, and we are not even given the figures at all. So we are just given the final balance. That's very important to take note. So we go to our balance sheet now. So we are just going to put our non-current assets. Then we put our current assets. We know our layout. So we've got the layout that we have here. If we come here, we have got that layout that we are having there. So we are just going to put our figures that we have there in the question and try to answer that question. Let's go. If you go in the question, non-current assets, the figure for non-current assets there is given in the question is 120,000. So we are going to put our 120,000 in the last column here. We have 120,000, 120,000. And then after that, obviously, after non-current assets, we go to current assets. And then the figure for current assets that we are given in the question there is 55,250. So 55,250 here. Put it in the column that is in between. And then obviously the layout that we use after current assets, we subtract current liabilities. Very important to take note of that. Then when we put so when we subtract current liabilities, the figure for current liabilities in the question. If you go to the question there, we find the figure that we are given for current liabilities. We are seeing that the figure for current liabilities is here, which is 14,000, and for current assets 120,000. That's the figure that we entered, and then for current assets 55,250. That's the figure that we entered. So we're just going to take this 14,000 and put it there. 14,000, and then this 14,000 is the figure that we are going to put here. 14,000. And this figure, we are saying less. Very important to take note. We are saying less. So whenever we are saying less in accounting, in our financial statements, we are subtracting. So we subtract that 14,000. And when we subtract that 14,000, you're supposed to get 41,250. So we just draw a line here. And the answer that we are going to put, we put it in the line that is just beneath the line that we have 14,000 on the other end. So if you come here, we are going to put the answer there. So I'm saying if you say 55,250 minus 14,000, the answer that you are supposed to get there is 41,250. So we get our 41,000 here, 250. And then after that, we know according to our layout, this is the first balancing figure that we are going to get there. And then we underline here. Remember this figure that we got here is the figure for net current assets, whereby we said current assets minus current liabilities. And the figure that we get there, we add it to 120,000, that is non-current asset. And then the figure that we get as a total here is supposed to be 161,250. 161,250. Very easy. The financial statement is statement of financial position that we are given for the partnership. It's an easy one because with no adjustments we are supposed to make there. It's only a matter of knowing your layout. So let's practice and know our layouts as exams are approaching, so that we don't make any mistakes. So here, that's the first balancing figure that we get. Remember, the balance sheet has to balance the upper total that we get is going to be the lower total. And also we should take note that this balance sheet, or the statement of financial position, obeys that accounting equation that says assets is equals to capital plus liabilities. So very important to take note. Then after that, now we go to the finance by section. Go to the finance by section. Remember, the finance by section differs with the type of business that we are preparing. If it's a sole trader, we know how we present this finance by section, and this is a partnership, so it comes to be a different way of approach that we use than that we use in a sole trader. Right. We also after that finance by section, we're supposed to list the capital that we have in the question. So here we say capital. So here we are going to say capital. We are going to say capital, and then in the question we have got Andrew and Chelsea. We've got these two partners, Andrew and Chelsea. Andrew and Chelsea. We have Andrew and Chelsea. Right. We go to the question and try to find out the figures that we have for capital for Andrew and Chelsea. Here, the capital's figures are here. We have got for Andrew, we have got 80,000. Then for Chelsea, we've got 50,000. So those are the figures that we are going to enter there: 80,000 and 50,000. So we are going to enter 80,000 and 50,000. So we enter them in the first, the last column, that one. So we have 80,000 here. We have 80,000 here, and also we have 50,000 here. Right. So that's the figures that we have for Andrew. We have got 80,000, and then for Chelsea we have got 50,000. So from there now we go to our current accounts. So for our current accounts, remember the question emphasized that we have to present the current account in the balance sheet. So very important. Now we go to our current account. Right. Let's try to move up our page. Right. So with that now we continue. Continue with our question. Right. For our current accounts, we are going to present that current account, whereby for one of the columns we are going to give it to allocate it to Andrew, and the other column we allocate it to Chelsea. So here in the same line that we have we've written the current account, here we can allocate it to Andrew, then the other one is for Chelsea. So we are going to present our current account as we go down. We know the current account is in the form of a T account, but when we present it in the form of a trial balance, the size, we are only going to have one column whereby we add what is on one side together, so that we get the balance at the end of the day. Right. Then obviously after we've done that, we are supposed to start with the balance. That is balance at the beginning. Balance. This is the balance brought down. We call it balance brought down. This is the balance that we have at the beginning of the year. So this balance, we are going to get it in the question. We go back. We check there. For current account, we have 1,600 as a debit. DR means debit here. It's a debit balance of the current account. And then Chelsea, we've got 5,200, which is a credit balance. So we know a normal current account has got a normal credit balance. So it has to be positive if it's credit, and then negative if it's debit. So in this sense, since we are not allocating in terms of debit and credit, we are going to start with 1,600. That one that is debit as a negative. Then that one 5,200 for Chelsea should be a positive. So we go back there to our answer section. We'll go to our answer section there. So for Andrew, we've got a negative figure, which is 1,600. And we know what we do when it's a negative, we put it in brackets. And then for Chelsea, we said we got there is 5,200. So we're going to have 5,200 here. Right. So having done this now, from there, we add the ones that we are supposed to put on the credit side of the current account. We add them, and then we subtract what we're supposed to put on the debit side of the current account. So we know what is supposed to come in the credit. So the first item that we can put there is interest on capital. So we are going to have interest on capital here. Interest on capital. So these figures are given in the question. Simple as that. This question is a little bit simple because we have got the figures that we are given there of interest on capital. They are pre-calculated. Let's try to see what we have there. Right, interest on capital we are given there 8,000 for Andrew and 5,200. 8,000 for Andrew and then 5,000 for Chelsea. So we go there. And these are the figures that we are going to put there. For Andrew, we have 8,000. Then for Chelsea, it's 5,000. So that is what we have there. And then after that, we also have salary. Salary also increases the balance of the current account, because this is what the partner is getting. So it has to increase the balance of the current account. So we see that salary is only allocated for Chelsea. There are reasons for that why salary can be allocated for one partner. Maybe one of the partners is not fully at that business, and the other one is the one who is always on the business. So it differs according to the conditions. We know what happens in terms of salaries. And remember, these things are agreed in the partnership agreement before the partnership is started. So we have got salary for Chelsea, 7,000. So we go there and also it puts salary. So for Andrew, we don't have anything, but we are going to have something for Chelsea, which is 7,000. Then after that, we also have the issue of share of profits. Share of profits also is supposed to be added there. Remember, I said anything that the partner is getting comes with credit. Share of profits or anything that the partner is receiving. And share of profits, we know that it depends on the profit sharing ratio. And these are the things that are agreed again in the partnership agreement before they start the partnership. So if you come here, share of profits, we've got Andrew, we've got 9,000, Chelsea, we've got 6,000. So these are the items that we are going to enter there, 9,000 and 6,000. For Andrew, we have got the share of profits is 9,000, so you have 9,000 here. And then if you go to Chelsea, it's 6,000. Right. So these are the entries that we have there. And then if you add those, and then we have exhausted everything in terms of what is supposed to be added there for the current account, opening balance of the current account. So it means we're supposed to add here to get a total. So if you add the Andrew, under Andrew there, we've got negative 1,600 plus 8,000 plus 9,000. So if you do that, you are supposed to get 15,400. So here we've got 15,400. And then we go to Chelsea, on the Chelsea column, we've got 5,200, we add 5,000, we add 7,000, we add 6,000. So if you do that, we are supposed to get 23,200. So you are here, 23,200. Then we try to go up there to accommodate everything there. Right, that's what we have there. Let's try to put down our lines so that we accommodate everything. Right. So that after that now we are now putting items that are supposed to be on the debit side of the current account. Right. Drawings. Obviously, we are supposed to have drawings. We are supposed to have drawings. So we have drawings. So these figures, again, we get them in the list in the question there. The figure for drawings are there in the question. You come, where can we get those figures for drawings? Yeah, drawings are here. We got Andrew 4,000 and Chelsea 3,000. So we are going to input those figures. Andrew there is for drawings 4,000 and the other one 3,000. 4,000 and the other one 3,000. And obviously, we check if we've got interest on drawings again. And according to our question, we do have interest on drawings. So here we are going to include interest on drawings. So our interest on drawings, we check again in the question the figures, the actual figures that were given there in the question. If you go back there, interest on drawings, you are seeing that Andrew has got 200 and then Chelsea has got 150. So we go back again to enter those interest on drawings. We are saying interest on drawings. Andrew has 200 and Chelsea has 150. So here we've got 200 and here we've got 150. And remember, these items, drawings and interest on drawings are going on the debit side, and whatever is on the debit side should be negative, like what we did there for the opening balance of Andrew is on the debit and it's a negative. So the same thing here, these things are on the debit. We supposed to subtract them and show them in brackets there to show that we are subtracting them. So that's the issue there. And then after that, now we cannot get the balance. We cannot get the balance at the end now. So balance, we can get it here. We can get the balance here. Balance, right? So the balance here for Andrew, we are starting here 18,400. That's the total that we got there. Then we subtract 4,000, subtract 200. So if you do that, you are supposed to get 1,000. We're supposed to get 11,200. Sorry, 11,200. And then here again, you are supposed to take 23,200 minus 3,000 minus 150. And then if you do that correctly, you are supposed to get 20,050 as your answer. 20,050. So this now comes as the closing balances. And then what we are supposed to do, we add those two figures. These are the closing balances, and they are all positive. Positive meaning they are credit balances. So we add them to get a total and put it in that column. So let's try to move our page up there so that we accommodate that figures. So here now we are adding 11,200 plus 20,050. If you do that correctly, you are supposed to get 31,250. So here we come here now, we get 31,250. So now this is the balance that we have for total for current accounts. So we are supposed to add it to the total that we have on top there for the figures that we have for capital for capital account. Because the figures for capital account are there on top. Let's try to see there. Right. So these are the figures that we have for capital. These are the figures we have for capital. We have 80,000 and 50,000. So we are going to say 80,000 plus 50,000. Then we go down, we add them with the figures that we got for current. These are 31,250. 31,250. So basically what we are saying is we are saying let's do this. Basically what we are saying the figures that we have here on top for capital. For capital, we have got 80,000 and 50,000. So we are saying 80,000 plus 50,000. Then we add 1,250 to get the this answer should give us the second balancing figure. So if you do that here, the total is supposed to come here. The total is supposed to come there. So if you do that, you are supposed to get 161,250. So here you get 161,250, which is the answer that we got here. So what is important is the balance for our statement of financial position to balance. So this balance that we got here should be the same with the balance that we got for the first balancing figure. This is the second balancing figure, 61,250. We compare it with the figure that we got on the first balancing figure. So here now we have got our first balancing figure there. which is if you go there, we are seeing it 6,250. So we got the correct answer with what we got on the second part. So that marks the end of our statement of financial position. So please take note of the layout. When you start from non-current assets, where do we go? We go to current assets. From there, where do we go? We don't go to current liabilities or subtract current liabilities from current assets. Then we get the net balance, we add it to non-current assets, we get the first balancing figure, we go to the parents by section. We start by the capital accounts, we put it on the last column there, then we go to current account. Depending on the question now, some questions might not need you to present the current account in the answer section. They will just need maybe to put you to put the balance of the current account. So listen to the question, what is saying before you approach, and this will make you a better scorer of a higher mark in account in principles of accounts. Zimsec. We expect the best for you. Let's keep in touch. Those who haven't subscribed, please subscribe. We are still going. It's not yet over. Until it's over, it will be over when we've won and we've passed. So I'll thank you for listening. We'll meet again in the next video.